right, good afternoon. Michael Loftus, Loftus Wealth Strategies, Wealth and Wisdom TV. Hope everyone's doing well today. Another very interesting day on what has been an interesting year so far with the markets. We're going to get into that. So all right, so here we go. Michael Loftus, like I said, we are back with another Straight Talk Monday afternoon, about 4:15. I try and do these every Monday, 4:15, sort of a wrap-up from last week, maybe talk a little bit about what's coming up this week. So, as I've mentioned, on our monthly market update video, it has been a volatile time, something we are keeping our eyes on, and the market is sort of broken down, but is now gone sideways. So let's get into it. I think the most important thing for me is looking at what I call my most important chart, and I'll explain why in a second. Obviously, we see the S&P here, but there's so much going on in this one chart. So at the top, we've got relative strength, okay? Relative strength of the market. You can see that line. You're seeing a series of lower highs. You're not able to break out. That's an issue. Not a lot of strength behind this. Let me go down to the bottom. Okay, the bottom I'm using what's called full stochastics. Okay, stochastics. That is a basic combination of various momentum indicators that I look for. And as you can see, I pointed out some of these times when it rolls over. And here we go again. Now, a lot of time I will use MACD, M-A-C-D. This is a faster indicator for the direction, which is why I have switched to this. Clearly, after today, you can see it again. It started moving over, and that definitely concerns me. So next up, on the core of the chart, there's a couple different things. We're starting to see what is called a classic head and shoulders. Okay, you see your left shoulder, here's your head, and your right shoulder is forming over here. That is a bearish setup, something that obviously has me concerned right now. So continuing to see it form, we'll continue to watch. So the next thing on my chart is I have the Fibonacci Retracements. I have a video on that on my YouTube channel. You can check it out. You can look it up. Basically mathematical numbers, where we retrace from highs to lows, etc. Okay? So there's a couple things here. You know, what you do is you mark your top, and then you have your bottom, which is our most recent bottom. And I can also do this from our 2009 as well. There's different time frames. But right now, I'm looking for direction on the short-term trend. Okay, because right now we know that, you know, we got to about 9 and change on the downside on the S&P, about 17 on the NASDAQ, okay, and we've been bouncing around. The question is, you know, will we go past that? And this chart, if I'm looking at it today, is showing me a lot of signals. It says that's becoming more of a probability. So when you look at the Fibonacci retracements, okay, so think of it this way. Each of these numbers, you've got 38, 50, 61. They could be resistance on the upside or support going on the downside. So in this case, you can see it. You know, this was last week. We kind of ran out of it and went right up to the 61% Fibonacci retracement, but then failed. Immediately went below the 50% retracement, okay? And we now have spent 3 days underneath there. We've tried to get above, okay? Tried to get above again today. Didn't happen. The other thing you're seeing here The red line here is your 20-day moving average. This is your 50-day moving average. So that's another thing that's happened on the short-term trend. Having problems with words today. This is 3 days in a row we have failed at that 20-day moving average, and it continues to go lower. Okay, the next big setup, if you were to follow this 50, there's your 200-day. Okay, if that occurs, that's considered a death cross. Obviously, we still have a way to go. Okay, but it is definitely not setting up in a nice manner. So again, when I look at the S&P, that's what everyone looks at because that's the most focus on some of the big TV channels. I definitely see a lot of indicators here that concern me. So moving down on the NASDAQ, we haven't even gotten above really or sustained above the 38% retracement, okay? Same thing here on relative strength, even worse than the S&P. Down here is the Vixen. Forgot to talk about that in the S&P. Vixen is the volatility index for the NASDAQ, okay? Again, not a lot of good-looking things here on this chart as well. So next up, let's go to, all right, it did move. I had a nice little funny quote here, but so I always talk about the new highs minus the new lows. In this scenario, I'm using the NYSE, which is, of course, the broader index, okay? And then new highs minus new lows is the histogram, okay? And when things are doing well, the market's doing well, obviously that is a good sign, okay? And if you look at what's been happening, we've had a lot of negative numbers. And here we are again today, okay? And we had 21 new highs today minus new lows. So no strength, really no strength in this market. We're not getting any signals that says that this market wants to go higher. And here it is again, okay? Now this updates at the end of each day. So this shows Friday. This shows 50-day moving average. At the top is your S&P, NASDAQ, mid-cap, and your 50-day, okay? You're looking for at least 40. Above 60 is strong and showing a trend change. I mean, look at smalls, right? We're down to 24, okay? We are down to 24 in mids. We are at 28%, okay, of companies that are above their 50-day, and then the S&P, and that is, of course, pointing down. So that is that stinky breath that I spoke about in our topics of the day. There just is no momentum to move this market forward right now. Okay, so next up, what is going on with bonds? Okay, so in this cycle, not going to get into that in this video. We follow also really the cornerstone is how we follow cycles. Okay, we believe we entered into cycle 4, growth slowing, inflation slowing. Now, there has been a little bit of change on that because of oil has stayed really high. So we're not sure. We're going to get that print this week. Another CPI, give us an idea. Have we gone up or have we, in fact, gone down? Because there's a lot of other factors that compromise inflation. So you've got each of those items there, okay, which sent us into cycle 4. Now, ultimately, we should see bond yields go down, but had a big move on Friday after the unemployment report. Okay, now today it's tough to, oh, there we go. So to me, I'm going to log in there. That looks like a little reverse candle, maybe a little bit of a hammer. Okay, whoops, sorry, let me move that back. So that gives us a little bit of hope. But when I look at the 10-year right now, one, we weren't in treasuries when we were in the last cycle, which was cycle 2. Okay, we are slowly positioning ourselves back in. We do not have a full allocation. So what does that mean? So in a 60-40 portfolio, okay, we just don't have those numbers. We're not at those numbers that I would be, which would be 40%, 50 even 60% if the market really goes down. So what you try and do is, when you look at what's happening, because what I've tried to do is on bad days is when I will add, okay? You buy on red, okay, you sell on green. And what this does is it shows you a couple things. At the bottom is the S&P, okay? This is the last time we went into cycle 4. We are actually heading into cycle 4 even before COVID, okay? So we had already started to position ourselves. Now 18, obviously you see we had 4 rate hikes there. So a little bit different of a time, okay? But when you get into cycle 4, okay, you can see the trend changes, and that's the 10-year. Now in the middle I have TLT. That is one of the bond ETFs I use. We're split right now between 5 different bond funds. Sounds a little crazy, but that's because we're broken down into different durations, shorter term, mid-term, longer term, and a deflation bond ETF that we're currently holding. So you see, in the past when we've had these type of markets, it has been positive for bonds on not the yields, right? Yields go down, prices go up. So that's the thought. Watching an interview this weekend, somebody I really respect, he says if this goes down, like I believe, down another 1%, that equates into a 10 to 15% type return in bonds, which is why we are slowly there. One of the things when you look at it, right, I'm going to wait until we break that trend, okay? We've been in a cluster. If I go back to this here, right, you can see the cluster right here. I'd like to see us break that trend before I add any more. I did add a little pinch on Friday, longer duration though, okay? So next and last, don't talk a lot about it, but Bitcoin, only because everyone's going crazy again on Bitcoin. Now, yes, I believe in Bitcoin. I've got a script I've written for an educational video. Want to wait till that I feel it's appropriate to produce that. But in my role, advising clients, retirees, etc., sure, I believe in it. I'm not taking a huge position, 2 to 3%, but I trade it, okay? I'm not a hodler, hold on for dear life, like a lot of Bitcoin enthusiasts, okay? So when I look at it, yeah, right, there's your Fibonacci. We're still not up here, okay? Let's see what happens. Broke the 200-day moving average. I'm not going to bottom feed. A lot of room to run. So if that happens, then I'll make a decision at that time if it's a good place to be. So let me go ahead and wrap things up real quick. All right, we've had a lot of volatility in this market. I've shown some of the names here. Now, Amazon, you put that there, not first, but when you look at that, they went up on Friday, helped the market move up on just 9% earnings growth. I mean, they went up because it was less worse than expected, okay? Now, I think long-term, sure, nice company and all that. I'm not going to get into the stock picking in the show, but, right, I think that it went up because the market was looking for something positive. When you look at companies like Ford, Facebook, again today, got hit again today. JPM's coming back, but, tried and true bank really got hit. Peloton made a big move today on a possible turnover. So this volatility that we're seeing has been crazy. Last but not least, PayPal. What was interesting from the earnings, if you're not aware, they own Venmo. So they see a lot of trends, okay, in money movement. And they've seen a big slowdown, especially in Venmo. Why? Because all that printing free money that everyone was getting is gone. It's drying up. That's really interesting. I'll talk about that more in a detail of one of our bigger market updates, but that is definitely something that I'm looking at. And then Snap that had a huge big move. So, again, when I look at things, still choppy, kind of staying in the middle here, not really looking to add, not looking to sell, waiting for a move to give me clear direction for our next move. Now, that being said, let me be clear. We are very much underweight equities right now. We've got about a 20% cash position, which has helped us this year. So just trying to be patient. And that's it. So as always, appreciate it. Again, we do market updates every month at the beginning of the month. I do these Mondays in the afternoon. We have educational videos. My next one coming out is about how to hedge the market, different instruments you can use. If the market does turn sideways, you want to look at that as an option to help in your portfolio, not only on protection or downside, but also performance. So like to do a lot of events. Make sure you subscribe depending on where you're watching. LinkedIn, Facebook, YouTube. YouTube is obviously our biggest channel when it comes to the videos. So thanks for watching. Michael Loftus, Loftus Wealth Strategies, Wealth and Wisdom TV.